Well, defense stocks have been moving up, and there's a lot of excitement out there that there could be more focus on local procurement, local manufacturing of this, and in fact, plenty of orders coming in as well. So to understand what's going on in that space, and one stock that's been in focus is Garden Reach Shipbuilders. Well, the stock has been moving higher. Today, it's more or less flattish. It's down close to around 2% odd. But you pull up a last 1 month chart, you'll see that the street has been quite excited. So to understand what's going on, we're joined by Mr. P.R. Hari, the CMD of the company. Hi, Mr. Hari. Good speaking to you. Thanks so much for speaking to us here on CNBC-TV18. Well, let's get some of those basics out of the way first. What is the KL capacity of GRSE? And if you could tell us what is the outfit capacity? What I'm trying to understand is what is the current capacity utilization level that you're working at?
Good morning, Nigel and Mangalam. Before I answer your question, let me just inform you and the viewers that we have started off on a very positive note during the current financial year, that is FY23. And the Q1 results have been very, very encouraging, with our revenue from operations moving up by over 90%, that is from 304 crores to 580 crores, if you compare with the Q1 of last year. And also the PAT going up from 21 crores to 50 crores, registering a growth of 143%, and our operating profit going up fivefold to 23.39 crores. So it has been very, very optimistic beginning for us, and I'm very confident that we'll be able to sustain the growth during the current financial year.
Mr. Hari,
now to answer
go ahead, sir.
To answer your question, as regards the potential that is available, both the Indian Navy and the Indian Coast Guard are major customers in the domestic warship building sector. They are aspiring to be 200 ship-strong fleet by 2025 and 27 respectively. So the opportunities are galore. On a positive note, the Defence Acquisition Council approved procurement worth 76,000 crores on June 6th, of which 36,000 crores pertain to an order for next generation corvettes for the Indian Navy. Again in July 26, the Defence Acquisition Council approved procurement worth over 27,000.
Mr. Hari, some of those details with regard to the Defence Council improvement and, a couple of other details, we already have with us. We want to understand what is the big opportunity for your company, because, a lot of the shareholders, they are listening into you, so they would like to know more. So if you could give us basic details, your capacity, how many vessels can you work on at one point of time, and your current utilization levels? Go ahead.
See, presently we have a capacity to build 20 ships concurrently.
Okay.
That is 20 warships, 8 large and 12 small or medium size. And our current order book is for 23 platforms. 23 platforms comprising of 3 projects for the Indian Navy. That is 3 P-17 Alpha stealth frigates, 8 anti-submarine warfare shallow water crafts, and 4 survey vessel large. This comes to 15 platforms.
Right.
And these are at various stages of construction. Some of them are at the pre-launch phase, some of them at the post-launch phase. So capacity-wise, there are no constraints. As far as capacity utilization is concerned, on the shipbuilding front, around 80% of our capacity is presently occupied. Now, once these ships, like 3 of these projects are expected to be, of the 7 projects that we are executing, both for the Navy, the Coast Guard, and 2 export orders, 3 of these projects are expected to be completed during the current financial year itself.
Right.
So capacity-wise, there is no constraint.
We understand that 26,000 crore worth order backlog is what you have right now. Can you give us a sense of when does that get executed? Of the orders that you just spoke about, 4 survey vessels, the vessels of P-17A frigates, etc., anti-submarines. How much of them will be delivered this year itself? The reason why I ask you this is primarily because over the last couple of years, your asset turnover ratio has declined from 3 to about 1. So at peak levels, what is the kind of revenue you can do, and what is the execution pipeline that you have?
Okay. As you rightly said, our current order book, position to be exact, as of 30th June is 23,583 crores. This comprises of 7 projects. Of this, we will be completing the survey vessel project by FY24, the P-17 Alpha project by FY27, and the anti-submarine warfare shallow water craft project by FY26. Among the smaller projects, there is one project for the Indian Coast Guard, a fast patrol vessel, and two projects, one for the government of Bangladesh and one for the Cooperative Republic of Guyana, will be completing during the current financial year itself.
Okay, all right. You know, Mr. Hari, one complaint that we have got from the street is you all are very conservative. So they would like to know, they know there's huge potential out there, but let's get a couple of numbers going then. When you're sitting on an order book of close to 24,000 crores odd, when can you hit 5,000 crores? FY24, can you do it? And also, what should be the margins? I believe you work on a cost-plus basis. So if you could tell us, what is the targeted margin?
Okay, first, you rightly said we are sitting on an order book of around 24,000 crores, and I mentioned the execution plan and the timelines for execution. So we expect our peak revenue generation during the financial years FY23, 24, and 25, with FY25 being the highest revenue earner in terms of the financial year. As far as the margins are concerned, to answer your question, we are not having cost-plus projects at all.
Oh.
We are not having that. It's a misnomer. Cost-plus projects were a norm in earlier times, but now we are competing with private players. To put you in the right perspective, both the ASW shallow water craft and the survey vessel large projects have been won on competitive bidding. The margins are thin. In shipbuilding, normally the profit margins, there's a PAT margin, ranges hover around 7.5%, which is a healthy margin. As far as my shipyard is concerned, we have always been maintaining a margin above this. And we're very confident through internal efficiency measures and process improvement, we'll be able to maintain margins above this. That is our assurance to the investors.
You take that point. Over the last few years, you have done double-digit PAT margins as well. Just wanted a sense on a couple of things. You know, you said your peak revenue year will be in FY25. What would that number be? Will that be closer to that 5,000 crore mark, as Nigel said? And will we see double-digit EBITDA margins as well? Because I have a brokerage note which anticipates almost 3,000 crore revenues by FY24 with about 9 to 10% EBITDA margins as well. That is point number one. And secondly, what the street is also building their hopes on is higher revenue coming in from portable bridges and ship repair, which is currently about 10% to go all the way up to 30%. On both of them, what is your comment? So the first one is the quantifiable number that you can do by FY25, and the second one, the revenues that you can achieve from shipbuilding and ship repair, portable bridges and ship repair.
Okay, thank you. And now coming to the revenue, our revenue from operations was around 1,130 crores during FY21, and we had kept an internal target based on the project execution plan for a quadruple growth, that is 4 times growth by FY25. We are very confident of achieving this, and we are moving in the right direction. I'm answering your question indirectly. Our revenue is on an upward trajectory. FY23, 24, 25, you can expect peak revenues with FY25, where we'll be able to meet our internal goal of quadrupling the growth of, revenue from FY21. That is around 5,000. Now,
take that
coming
point,
to the EBITDA margins,
growth from FY21 levels for 5,000 crores. Not only is your revenue in upward trajectory, even as your stock is as well. 75% gains is what we've seen in just the last 12 months, most of them coming by in just the last 6 months. Thanks a lot, Mr. Hari, for joining in. With that, we'll take a short break. On the other side, we get you more on the markets as well as individual stocks.